there, this is James and you're watching Tixee Live. And a very good afternoon to all of you, and all of you a very happy Tuesday. In today's program, I want to discuss the fact that the markets are having another good day, as having another day in the green, and why that is the case. And that's, of course, the all-important question: how long is that happy feeling, or the days in the green, going to last? Plus, a couple of other little developments in reference to the UK housing market, which I talk about a lot, and of course, anticipation for OPEC Plus meeting tomorrow. But before we get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. With that out the way, let's get started. So, hello there. Hello there. Nice to see you, Tony. Hello to you too. And hey there. Good to see you as well. Hope everybody's well. Right. So, whenever I'm writing these little presentations, after I'm doing my research, I'm always trying to come up with interesting sort of titles which illustrates what's happening with the market. And for the thumbnails, I can only fit a certain amount of words in. But I found a certain song by a certain band, which actually sort of fits the current mood of the market. The band, of course, was Green Day, and the song was Wake Me Up When September Ends. Now, I can link both the name of the band and the title of the song together because literally, like I said, the market is having a good day in the market again. We are seeing a lot of green across the board. And realistically, we've seen it for the last 2 days. Literally, since September has gone, the first 2 trading days in October has been good for the market. So it's literally like to say the market is finally woken up. However, I still think the market is dreaming, and I'll tell you a little bit about that. But anyway, the market does look set to have a second day of gains. In fact, it is the best start to quarter 4, or the third best start to quarter 4. Don't forget, it's a new month, but it's a brand new quarter as well, since 1928. So very, pretty impressive. And currently, like I say, everything is sort of trading in the green. You've got the S&P 500 trading higher at 2.68%. NASDAQ trading 3.04% up higher. And obviously, the Dow 30 currently in the green at 2.38%. Obviously, a lot of technology companies are performing in the green today. So this is helping the NASDAQ in particular. But like I say, the market is in a very optimistic mood. And the reason for that is a saying which I've used a lot in my videos, which is bad news is good news. And good news is bad news. What do I mean by that? Well, really what's driving this, for one, the market survived a brutal September. But as well as that, it's all down to that one bit of US data we had come out yesterday, which is the US ISM manufacturing PMI. And like I said this morning, and I said yesterday at the time, it was announced at 50.9 versus 52.2 expected. In fact, it's the lowest reading in 2 years since May 2020. So the reason why the market is acting in an optimistic mood is because, like I say, bad news is good news, because this shows the manufacturing sector is beginning to slow down. So good news is bad news. And what that means by that is simply because the market truly believes the Fed's going to be gentle. They think this negative data coming through, and we'll start seeing negative data, the Fed is going to be gentle. And what I mean by gentle, being gentle with interest rates, because all along, the market has been very, very nervous about the aggressive stance that the Fed has been doing with interest rates, pushing not just the US economy, but the globe into recession. In fact, the UN today did warn that the current monetary stance by the major central banks is going to push the globe into recession, which will hurt more the emerging markets. They did make that statement today. But anyway, all this is building up to is because they're thinking that the Fed is going to pivot. Okay, which is really, really premature. Okay, yes, that data was was worse than expected. It's a 2-year low. And the other argument they're going to say is, well, the RBA did it. The RBA did more of a dovish pivot today. They've been raising interest rates by 50 basis points. And all of a sudden today, they've done 25. So if the RBA can do it, then the Fed can do it. The Fed can do it. But it's a different story for the RBA. Okay? Their inflation is at a 20-year high, not a 40-year high. And if you look at the inflation numbers, their inflation is 6.1%. 6.1%. And their interest rates are still going to 2.6. The US inflation is 8.3%. And the UK is at 9.9%. Germany's at 10.9. EU is what's the EU now? It's 10.1, isn't it? Now I think it is. I haven't updated that bit. But so Australia's only got 6.1. So the RBA can do it, but the US, the Fed, necessarily can't. And this is what that people forget. Okay, their target is 2%. Their target is 2%. Okay, and that's 4 times. And inflation at the moment is 4 times their target. And everybody also always forgets. Okay, that the Fed just over a month ago underlined their commitment of bringing down inflation. They've had this point of being very aggressive with fighting inflation and raising interest rates. So just because we got one little bit of it is negative US data, okay, and the RBA did it this morning, the Reserve Bank of Australia did it, suddenly that whole impression again that the Fed is going to pivot is in the market's mind. And I still underline this. I think the market is kidding themselves if they think that the Fed's going to change stance. I really, really do. I really do. I keep expecting a pivot now by the Fed. And, with inflation 4 times its 2% target, I seriously doubt it if they do. The one thing which could just maybe change, in my opinion, the Fed's mind about maybe doing a pivot would be the NFP, which of course comes out this Friday. This, if we start seeing a slowdown in the that is a fantastic question, Tony. Thank you. Before I get into my point, that's a brilliant question, Tony. Thank you. That's a brilliant. Yeah. What is a Fed pivot? Brilliant question. Basically, when we say pivot, it means that obviously it means they will hesitate or stop raising interest rates and then pause raising interest rates and then look at their current tightening policy. That's what it means. Basically putting the brakes on. Okay. It could also mean instead of doing aggressive 75, which they have been doing over the last couple of interest rate decisions, they could suddenly decide to do maybe just a 25. That would also be considered a Fed pivot as well. So basically it's a change in course, either a pause in raising interest rates and then re-looking at their monetary stance, or doing a dovish pivot, a lot less interest rate hike than the market anticipated. But that's what a pivot is. That's a brilliant question, Tony. Thank you, buddy. That's a really, really great question. But then, as I was saying, the only thing which I think could potentially lead to a Fed pivot is if we start seeing a slowdown in the labor market. I really do. But again, it has to be a really dramatic slowdown, okay? Because don't forget, the Fed at the same time has said they'll be happy to see a soft labor market, okay? And all along, their argument has been that they can carry on being aggressive with interest rates because they've got a strong labor market. If we start seeing real cracks in the labor market, just maybe then the chances of the Fed doing a pivot becomes really, really close. But anyway, let's have a quick look at the market and see what's happening in the market as it stands at the moment. Okay, so like I said, this is let's have a look at the euro in general, because I say the market's in an optimistic mood, very optimistic mood, because of the anticipation of the Feds being gentle. We got the euro, we basically got weak US dollar across the board. Okay, the euro is currently trading above 99. Okay, currently trading at 99.46. For me, realistically, I really want to see it go above 99.82 for it to really get that momentum, because then the next key level for me, for the bulls, would be a potential resistance area 1.00577. But yes, at the moment, we've got a dollar weakness on that. The sterling as well, the British pound, US dollar, is now having its 6th day of gains after crashing to an all-time low. This is also up higher, trading at 1.14045. Again, mainly down to the weaker dollar than anything else. Key area of interest for me, or key potential support, is 1.14642. Gold. Again, gold is benefited because of the weaker dollar. Currently trading at $1,712.83. Key area of interest for me, what I'm watching, and I've been watching for a while, is $1,726.48. We need that to break it through before we can see real momentum. Oh, you're welcome, Tony. My absolute pleasure. I hope that sort of made sense. And, basically they're pausing what they're doing. That's basically what it means. But no, thank you for the question. It's a great question. So that's where we are with gold. And Bitcoin, again, because we've got risk appetite as well on the market because of this current happy feeling, this green day, as I was calling it. It's currently trading above the $20,000 mark. However, it's still not broken through that key area, which we've been sort of basically nearly range bound for a while, which is $20,355. I'm keeping a very close eye on that as well. So what else is new? What else is happening? Okay, the other reason why I think this happy feeling is going to be short-lived, I think in the medium to long term, it eventually will start to peter out, is because we got other fundamentals in play, which is obviously spooking the market. Now, I know I talk about this a lot, but I'm going to go on about it again anyway, because I think this is a story waiting to happen. Going back to the UK housing situation, we're tinkering on the edge of a housing crisis in the UK and in the US, but I'm going to talk about the UK today. UK's biggest mortgage lenders will raise rates again tomorrow. The average now 2-year fixed rate will be around 6%. To go to show you how dramatic this means, or how dramatic this is, at the start of December, the average 2-year fixed rate was 2.34%. So that's another worrying thing. So with high inflation, economic slowdown, and increase in mortgage payments, I can see this becoming a really big problem in the future, not just for the UK, but for the US as well. Another thing is going on to commodities, which is another problem. Again, is going to be another issue. Sorry, excuse me. Is that obviously oil also continues to move high. This is not, again, that it's not down to demand. We're not seeing economic growth, so it's not for the good thing. So it's not a demand thing. Okay, it's a supply issue. This is why oil prices are moving high, because obviously they're moving high on the expectation of OPEC's meeting tomorrow. OPEC Plus is meeting tomorrow. Now, there is expectation that OPEC will announce a production reduction. It rhymes, doesn't it? A reduction in oil production by 1 million barrels per day, greatly affecting supply, which means prices are on the move again for oil. So let's have a quick look actually at this, where oil is at the moment. Again, I think this is another situation with commodity prices, especially energies, moving higher again. This is not necessarily a good thing for us or for inflation or for everything in particular, because it's not being affected by demand. If there was growth and it's actually prices were rising on demand, then that would be I could see that as a positive thing. This is gone to the fact that OPEC's going to cut production, or talking about cutting production by 1 million barrels a day. So as you can see, this is the second day of gains in a row for oil, for crude, currently trading at $85 and $0.02. Brent is the same. Brent's on the move as well. Second day of gains, currently trading at $90.50. So, like I said, we are anticipating OPEC to do that cut in production tomorrow to announce it. So it'll be interesting to see if it is indeed just 1 million barrels per day or if it's going to be more. Any other event really sort of happening today? We've got Christine Lagarde. She's speaking in Cyprus in about 30 minutes' time. So it'll be interesting to see what she potentially says. It's going to be really realistically about underlining interest rates again. We all pretty much expect the ECB to be raising 75 in the next meeting. So no real big surprises on that. Major events still to come this week. We have US ADP employment change. Next week, US ISM services, EU retail sales, German retail sales, US unemployment rate, and of course, US non-farm payroll. I stress again, I think any idea that the Fed may do a pivot and halt what they're doing, there's only chance of that happens when we start seeing NFP. Because of this, I will be doing a watch along for the US NFP at 12:20 p.m. UTC, because I say potentially this could be a big event. So please come along and join me for that. European equities, as they stand, again, in the green like everything else. FTSE, 2.38% higher. DAX currently trading in the green, 3.32% higher. And US Stock 50 having also a very good day, currently trading 3.65%. So don't forget, you can ask me questions anytime. I've only had a couple of questions. I had a cracking question today from an individual called Tony, which I really appreciate it. Very good question. So thank you for that. Is there any other questions at all? Or anything else anybody else like to ask me? Or share their opinions with me? What do you think? Do you think this green day, as I'm calling it, is going to last? Or do you think eventually the market will suddenly wake up to that? The fact the Fed has not changed its position, or unlikely to change its position. Don't fight the Fed, as I often say. Or just simply say hello, if you like, say hi. Okay. Don't forget, if you think of a question later, you can put it in the comment section, either on Facebook and YouTube. I will see them and I will reply to them next time I go live on air, which of course will be tomorrow at 8 a.m. UTC to discuss the European session, see how the US session is closed as well. Plus, again, tomorrow at 2 p.m. UTC to discuss the US session. So do bear that in mind. One other thing while I'm thinking about it, don't forget as well, I got the watch along on the NFP on Friday, and I will announce more details about this other thing tomorrow. But we will be doing another hashtag Ask James episode on Thursday. Those of you who are unfamiliar with this series, it's slightly different from the Tixee Live series. These are still live, still broadcasted live, because live means live, but they're going to be videos totally. Yeah, there we go. Ask the question. I do have an just want to ask. Yes, I do have a hashtag Ask James episode this week. That's going to be on Thursday. I know, just announced it. I know. Oh, sorry. Yeah. It's going to be on Thursday at 12:30 p.m. UTC, and the subject of this one, because remember, these are educational driven, not so market education. The subject of this one is going to be introduction to chart patterns and pivot points. So I'll show you how to calculate pivot points and how to identify certain chart patterns. So please come along and join me for that. If there is no other questions, not a problem. In that case, big shout out to Tony SMF 790 for watching and coming along and saying hello. And great question, Tony, by the way. Really good question. Really glad you asked that, as I was talking a lot about it, and it was perfect timing. So I really, really appreciated that. Anyway, till next time. Don't forget, these little videos are for educational purposes only. And before I do that, I forgot my other bit. Like I always say, if you're watching me on Facebook and you've enjoyed this little video, by all means, give us a follow. If you're watching me on YouTube and you enjoyed this little video, subscribe if you like. Hit the notification button so you know next time I'm going live. If you enjoyed this video, found it useful and interesting, and you put up with me, my over the top enthusiasm for the markets, which I can't help because I love the markets, then give me one of these. It's nice to know that you like what I do. Anyway, let's do the ending properly this time. Hey, this is someone else. Hey there, my friend. Good to see you. I hope you're well and having a really good day. Hope you're well, bud. Anyway, as I was saying, if there is no other questions, I'll wrap up. Or anybody else want to say hello? Okay. Let me do my I do my wrap up then. Anyway, as I always say, and thank you for coming, everybody. I really appreciate it. I really do appreciate everybody taking the time out, by the way, to come out. I love the interaction. I love when people say hi, ask me questions. It's brilliant. But I also really appreciate all the time people take out to come and watch my little videos as well. Anywho, don't forget, I'm back on again tomorrow at 8 a.m. UTC and again tomorrow at 2 p.m. UTC as well. So anyway, till next time, don't forget, these little videos are for educational purposes only and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, I hope you watch me tomorrow as well, my friend. I really do. I appreciate that. I really do appreciate it. Thank you. I really do too. Please come and join. I love you too. But anyway, till next time, every single one of you, trade safe.